examining the intersection of current geopolitics and the economic outlook. To guide us through these fragmented waters, please welcome Lord Jim O'Neill, former Commercial Secretary to the UK Treasury, to follow up on his insights as well. A session of Q&A will be moderated by His Excellency Dr. Amer Bisat, Lebanese Minister of Economy and Trade. Please, let's give them a round of applause.
Lord O'Neill, it's a pleasure and honor to be moderating your session. I was asking before, how should I introduce you? And you said, Lord Jim O'Neill, Manchester United fan. So here it is. Why don't we start, if you don't mind?
I'm going to start by being facetious, because whenever I hear that said, where are the Liverpool fans in here? Can somebody escort them out of the building? I'm not continuing while there's any Liverpool fans.
I refuse to. Lord O'Neill, maybe we could start by literally a very, very broad question. Where are we in the world today, the world economy, and where are we heading? How are you seeing, how do you frame the global economy today?
So I have listened to all the very interesting discussions that have taken place earlier. And there are many themes that come from that I believe, but I have a sort of different angle on it. So I'm starting with this chart. And you'll be pleased to know I'm not going to give you a slideshow. I'm just going to use a few to illustrate. So it is a very popular notion that we have this chaos, change in the global order, etc., etc. Quite a lot of many weeks, I'm like, wow, it's taken people 25 years to realize what's been pretty obvious to me, the whole of this century, millennium, whatever you want to call it. As most people here know, I have the phrase BRICS stamped on my forehead for the rest of my life. This chart shows you world GDP growth since I first started in the financial markets in the 80s. And a lot of people don't seem to realize this. In the noughties and the decade that followed, despite plenty of shocks then, not on the scale of what we've had arguably the past few years, but we had a lot of shocks, including the 2008 financial crisis.
Huge.
World GDP growth was stronger in those 2 decades than the previous 2.
Absolutely.
And even though it is the mood of du jour that globalization is finished, it doesn't feel like that when we all spend far too many hours every day on God knows what social media, which is just some new form of globalization than the ones that our era talk about. And in fact, I won't have time to show it, but there's a chart in here that shows, actually, why don't I flip back? South Korea, which reports its monthly trade data the day after the next month starts. And I've often said, some of you will have heard me say this a long time ago. By the way, it's beautiful coming here, and congratulations to our good friend in this staggering group he's put together. There are friends of mine that I haven't seen for 30 years in the first days of when I used to come in at the Gulf, and it's a great pleasure. Anyhow, some of them will have heard me say it, and you have, that unless South Korea does trade with Jupiter, it's a very high frequency indicator of what is actually going on in world trade. So on what day? On tomorrow's February the 1st.
Yeah.
Or is it? Yeah.
No, day after,
no,
actually.
Day after.
Day after, yeah.
On Sunday, we will see what went on with world trade in January. And yeah, it hasn't been going gazoomers, but it's not collapsing. I could go back further. I put it like that because, going back to this briefly, at the heart of what's all the chaos, which is chaos in geopolitics, is because the new guys are taking more and more of the global pie, and the old guys, ironically, to some degree the exception of the US, are taking less. And the new guys are like, we don't have a voice. You guys from countries that never have any growth and never seem to get much right still tell us how the world should be run. And it's taken my good friend Mark Carney to shake people up and think, this is crazy. We've got to start behaving and thinking differently. And that's what So yes, there's endless things that are a bit of a shock to the presumption of the world, and many of us were trained through. Because I happened to stumble across this thing 25 years ago, it's called reality.
So it's a fascinating stepping stone, because I was listening to Dr. Al-Haryan before, and he defined the period of the 1990s, the Washington Consensus, as a place where we trade more with each other, we send capital back and forth to each other, institutions mattered, right? Sort of the whole idea of an anchoring of institutions, good governance. That's different. That's not the globalization that we're living in today. So you're making the argument that globalization is not dead, it just changed.
Yes.
Can you spend a little bit more time about...
Another, there's endless charts. I want to come onto this stuff a little bit as well. The Donald chart. So what has changed are three things. First of all, the US is nervous about hanging on to its dominant place in the world. Another way of thinking about it is that the strange human beings in the United States have decided to elect for a second time this guy, somebody that has pretended to them, listen to me, and we will still be the king of the world forever. There's a pretty good chance that history, amongst other reasons, tell you that's just kind of mad. But that perception is around because they think all these other guys are only growing because they're stealing it from them, which, as that chart showed, is kind of mad. The second thing, importantly, is, yes, because of the actions some of those people are doing, we've done it in the UK with Brexit. Remember, Michael Gove, don't listen to experts. Surprise, surprise, and I think Mohammed touched on it, the UK economy has severely underperformed since we made this wise decision to get out of the single biggest free trade zone closest to our borders. And if you do those kind of things, that's what happens. And if our friend the Donald carries on with this tariff amusement, unless there is a deliberate effort to raise US savings, it's not going to work. And Mohammed sort of touched on it a little bit. Yes, Chinese direct exports to the US have fallen sharply, but Chinese exports everywhere else have risen more than that. And surprise, surprise, most of those countries are exporting more to the US. And in a world where, economics is economics, but the balance of payments is an accounting identity, as you well know. And if one side of it is a positive, the other's got to be a negative. So, as I'm sure many of you here have been dragged into meetings about the gazillions more investment you're going to put into the US, which the Donald boasts about, guess what? If that happens, there's no chance of them improving the trade deficit.
Absolutely.
But
let me push a little bit on this region, and I want to sort of step down here and talk a little bit more about the regional and country level winners and losers, right? Because in the model that we've all had in our minds, and you and I are roughly the same age, when you were talking about BRICS, right? We mapped it into certain winners, right? Large, democratic, and the reality is the ones that we thought would be winners ended up not doing that well. And it's right, Brazil underperformed, Mexico underperformed. And instead, we have a bunch of other countries that probably we wouldn't have thought about. And I'm thinking of India, Vietnam, I'm thinking of Saudi Arabia. I'm thinking of the US. I mean, with all respect to, US has done exceptionally well in the last 10 years. We would have thought they're a mature economy. How can we think of the winners and the losers? And I'm going to take you future and forward-looking. Who are the winners in the next phase?
So this comes to the third thing I was going to answer before. You look at the trade going on between the BRICS countries and the BRICS Plus. That's not collapsing. India which has taken their leader 7 years to even go to Beijing and have a conversation, and has plenty of their own tariffs, as you well know, its exports to China are exploding. China's exports to India are exploding. If you look at real detailed numbers about global trade, they're like, what are you guys talking about? You go and hang out in Dubai for 2 days, you're like, this is real. And so the really sensible places are, and this goes to another thing that Mark said, which is very dear to my heart. I'm going to do a bit of self-promotion and advertising here. Because of the fact there's all this kind of confusing and very loud talk, I'm in the process with a colleague of mine of trying to start up what I call a non-think tank, or a do tank, which is going to be called BRICS plus thinking. Because as Mark touched on, and it goes back to the Finnish Prime Minister or Foreign Minister, we need to think in the West about a bit better about values versus realism. And we still pontificate about these endless values, and quite frequently, we only use them when it suits. And of course, people in the global south, let's call it, or what I call the next 11, which is where half of the BRICS plus are from, it's like, you expect us to take these things seriously? You either really believe in them, and we know that's how we do it, or we don't. And so, to the specific of your question, going back to what really was behind the whole BRICS paper, here is global governance, which is another way of what you're asking about. So, of course, the G7, which it's quite amusing if you speak to a senior European bureaucrat, they sort of, on the one level, like that because Donald Trump's come along and President Xi's gone a bit weird in his third term, the G20 doesn't now work. In fact, it's quite hard for them to get all of them there at the same time. So they're like, the G7 is back. I'm like, what kind of crazy mind have you got thinking that? The second line down, or column, is actually what I suggest, my first BRIC paper, which many people still haven't actually read, because they often refer to it as some kind of investment theme. It was actually about getting a better G7. And it's getting the 4 BRICS in and having the Europeans, if they want to be serious about virtually anything on a global basis, somehow they've got to try and act as a collective force. There's the G20, which, of course, in 2008, to his credit, President Bush, who resurrected it from a sleeping nothing, brought them in and brought Saudi Arabia in. Interestingly, our exciting friend Donald Trump, in his national security strategies, make noises about a C5. And what is very interesting for me, there's only 2 of my countries from 25 years ago that are missing. Now,
but none of them is, look at the last one, and I want to underscore my point, or at least push a little bit. None of them is an economic powerhouse anymore. The US is clearly, right? And
in the G7?
In the CS, in the G5. Today, we're living in a world in which Japan is relatively weak. China is losing momentum.
The oddity about those 5 is, why is Japan in it?
Why is Japan in it, right?
But you say none of them are a powerhouse.
Well, US and India, I presume, are.
When was the last time you were in India?
India
India's probably growing close to 8%.
But why isn't...
India's going to become bigger than Japan and Germany in the next 2 years.
But when do we start thinking about Saudi Arabia, about South Africa, about Bangladesh, about Nigeria? At what point do they become the next power? And from a completely on the other side, what are we thinking about Europe here?
So the answer is the BRICS plus, and it goes back to why we're going to launch this thing. So at the moment, the BRICS, Saudi Arabia was invited, as you know, to become a member of it, and it's not officially become one, but it's kind of effectively a de facto member. The most interesting member is the very latest, Indonesia. When people ask me, as they did forever from those countries, why didn't you include me Indonesia's got the biggest reason to complain. It's got fantastic demographics.
Completely.
And despite the fact it has a lot of commodities, so it's vulnerable to the commodities curse, intriguingly, Indonesia's coped with the past 20 years rather well. And so Indonesia's got a potential to be a really serious, large economy. One of the N11. Nigeria, 20% of Africa's population.
Exactly.
If that completely crazy country could ever vaguely get any policies going in the right direction, oh my goodness me.
So there's a whole set of new countries that we should be watching.
And then there's another group of members, which is why the UAE has been so interesting for me, because they're one of the BRICS Plus.
Absolutely.
And I think, there's this perception because we're all scared of President Trump, oh, you can't become one of them. But if you kind of point out, well, India is one of the founding members. Absolutely. And everybody in the G7 is desperate to fall over backwards to do things with India. So it depends how you behave as part of the BRICS Plus. Seems to me, certainly in my country, they're pretty desperate to fall over backwards to do business with the UAE, Saudi Arabia,
Absolutely.
And so on.
So
I think it's a very interesting thing for the Gulf.
So on the completely other side of this, one of the huge surprises for me in Davos 2 weeks ago was the thesis that Europe is potentially back. I have to say I was shocked by this thesis, but the idea being extreme amount of defense spending, energy spending, and a commitment to deregulation, and this idea that we found that we were pushed into no more complacency. That this idea that we're protected by the US is no longer valid. Do you buy that argument? It was a surprising amount of people who told me Europe is the next thing.
So I can't resist in making two very facetious, short replies. So maybe there was a lot of Manchester United fans hanging out in Davos because we just beat Arsenal and we just beat Manchester City. So, we kind of pretend that we're the kings of Europe, even though we've not been in it for a decade. Secondly, I have often trained myself to think that the mood in Davos is one of the best reverse indicators, if you're a financial markets person, I ever came across.
Absolutely.
So it's very bothersome that you say that, because it would be great if Europe's getting its mojo together, and there are clearly a few signs, but it bothers me if that was the kind of collective view in Davos. I will quickly add more seriously. And again, as you well know, and many people here know, it takes a seismic shock to get this complicated place called Europe to actually change. Look again, people talk about sclerotic growth. Anybody been to Spain recently? Anybody been to Greece recently? 15 years on from these countries being savagely attacked for their mistakes, these guys are not only showing good cyclical momentum, but some signs of structural improvement.
It's changing, yeah.
And so what I do, if you wouldn't have said that to me about Davos and my historic view, I would have thought there's a good chance that Europe might positively surprise people.
But from the south.
Because people's expectations are just so low. The most important change in Germany is that they've changed the fiscal framework. Germany's had no domestic consumption for 25 years. How can Europe's largest or Western Europe's largest populated economy persistently live on exports?
Absolutely.
And they have found out in the past 5 years, guess what? If you do that, and there's two really big global shocks coming together, you're going to get whacked. And finally, there's people in Germany waking up to think, we better change our model.
I have to say that's part of the optimism, is that the largest animal in Europe is starting to spend.
Yeah.
And then, so maybe that's part of the optimism. Okay, I'm going to ask you two questions about the two big countries, US and China. Maybe draw the market implications. Where do you think the market is heading? And then we'll open it up for conversation. Obviously, if there's one message about the US, is it's outperforming expectations, right? It's outperforming expectations. If you would have expected the kind of political, economic shocks that we've gone through, you wouldn't have expected the kind of recovery that we've seen since post-COVID. and the kind of technological explosion, right? The amount of investment that we're seeing in AI, the innovation, right? Is it sustainable? And as a macroeconomist, is it potentially inflationary? Is this something we should be worried about?
I don't know. My honest answer is, which I learned in financial markets, yes, all of those things seem quite possible, as Mohammed rather eloquently explained, but they might not be. I can't wait. I haven't run into Nouriel yet, but when I heard Nouriel is like a raving optimist about the US, I'm like, oh my goodness me. First time Nouriel, I recall, has ever been optimistic about the US. But, and again, I've been in the markets 40 years, so let's see. But here's my real answer. So it's the mood of the moment that the US is doing wunderbar. But actually, we just had consumer confidence survey, weakest in a decade. And there are clear signs of what you might call, or is become known as a K-shaped economy. And very interestingly, if you look at the opinion poll rating of the president, it's slowly falling sharply. Mohammed mentioned about the affordability issue. Less well-off consumers don't think it's a boom-town economy. And if you really look closely, there is a lot of issues. And the way my view on AI, I wrote something about, actually when Trump came to the UK with all his gang, and it was kind of a bit insane that the whole theme of that short trip was, what deprived part of Britain can we build a data center to satisfy these guys? And I'm like, and they started going on about small modular reactors, which is something I've been campaigning for over a decade. I'm like, what, we can't build a small modular reactor because we want one, but we can do it just to keep these guys AI? I'm like, there's something very unsustainable about that. And so, again, as I think Mohammed was touching on, and we economists call dispersion, let's see if AI does anything more than for the 7 and others that have such huge valuation and ownership of those that have been looking about. Let's see if the diffusion out to the rest is true. And the other point to quickly add, as we've seen throughout time, are we trying to believe that there's something that special about 350 million US people that won't have dispersion effects elsewhere in the world? And that's what really matters. Here's another thing that might surprise. If in the UK we adopt the best of AI correctly, we might finally find a way of having an efficient national health system. Absolutely. And there are endless things like that all over the world.
The only, not pushback, but the only comment I have is that of the short term, it's not the implementation of AI that I think is going to draw the growth, but the capex, the spending on it that we're seeing. And what shocked me, one of the things I was looking at the other day, and I'd love your comment, your reaction on this, is that last year we saw roughly $500 billion worth of capex in AI. That's a big number. But what struck me more is that amount of investment was only 65% of the cash flow being generated by those companies. There's no debt.
Ooh.
I've never seen that kind of investment without leverage.
Have you looked at Oracle's share price recently?
No, I'm not talking about valuations. I'm talking about the sustainability of the spending.
Yes, but one of the reasons why they've had not so great a time is, surprise, surprise, the markets have sussed out there is some debt fueling what they've been doing. And so let me not get completely carried away on that side of it. Right. Quite clearly, there is a massive boom in investment spending going on from those guys. But as always, you got to really analyze rather than just believe what you read in a newspaper. And the second thing that makes me worry is just the past 2 days. So I can't remember the exact number, but what's the leading AI?
NVIDIA?
Not NVIDIA. The one that's
Anthropic.
So these guys have just done another massive raise. Guess who's providing most of that capital? It's the rest of the same gang.
They're borrowing from each other.
So are you telling me that that's really sensible and sustainable? Yeah. The financial market part of me has a slight, okay, I've seen this game before in Japan in the late 1980s.
Okay. Okay, finally, China. One obvious, just like the US has been, to me, surprising in terms of its potential growth. China has been on a fairly gradual deceleration of its growth, right? And at a time when demography is against it, where there's excess capacity, where there's political issues about efficiency, should we be worried about China, or at least no longer as optimistic as you and I would have been a few years ago?
So let me give you 3 answers. Could spend the whole weekend talking about China. This, going back to the first chart, the very last column is what we assumed as part of making the BRICS dream such a big story. Guess what the number is for this decade? 5%. Guess what China's doing? 5%. So some of the issues that freak people out, like the peaking of the labor force, it's not news to people that have really looked at this stuff. Look at the way that they've dealt and are trying to deal with the bursting of the housing market bubble. I cannot remember in my professional lifetime where a housing market bubble has peaked where it hasn't caused utter chaos. As of yet, that's not happened. And yes, everybody talks about it, but, and again, I think I heard Mohammed touch on it a little bit, the flip side of, and demand is clearly too weak, but the other side of the coin is there is more and more signs that the supply side is starting to improve again, and that Chinese productivity is starting to improve. Right. And the very last thing, which, because of all of this, I follow closely, because of the rise in the RMB last year, which was contrary to what everybody thought, China's GDP at the end of last year went above $20 trillion. And for the first time, and that meant it was a 1.3 trillion increase over the year before. So as fantastic as India is doing, and it is, last year, sclerotic, mega challenge China created another quarter of an India in 1 year.
Super clear.
So it's not bad, huh?
Not at all. Okay, so to summarize your regional views before I ask you about markets, you are still optimistic on BRICS, obviously extremely optimistic about BRICS Plus. You are question marks about the optimism on Europe, even though you seem to be optimistic on the South. You seem more equivocal on the US than I think the consensus is out there. And China, you think it's still the powerhouse and still the place to be. Is that fair?
Who knows? I mean, luckily, I don't have to forecast things every day of the week like I did for 30 years. I don't envy those of you that do. But when I see, and I'm also a kind of, let's call it an old-fashioned valuation guy. When you see that the US stock market, is something like 80% of global market cap, and the US economy is 25% of world GDP, that sends lots of
concerns.
Careful. And then when you delve within it, and you see this colossal domination of the S&P by these companies, yes, there is a chance that as the markets are showing, US GDP trend growth is going to be 4% instead of 2%. But I'm like, this is when they've just cut net immigration to 0. Right. And anybody trained in economics knows that long-term growth is driven by 2 things: the growth of your labor force, and the US labor force now is not growing. So the optimists have got to be really right about the productivity story, because otherwise they're in for a big shock. And they might be right.
No, absolutely. So actually, it's going to be a little bit of an unfair question. I'm going to ask it, because it's going to be an introduction to my next question. Emerging markets have significantly underperformed the thesis. If you were, when you were talking BRICS, when everybody was listening, when I personally went into this industry as well, the expectation was there's going to be economic convergence with significant outperformance of capital. It did not happen. What makes us think that this time around, EM significantly underperformed for roughly 20 years? And now recently we've seen a bit of underperformance. What makes me believe that from now on your view that is clearly more EM positive is going to play out this time?
So let me say 3 quick things about that. So first of all, as I said, and I'm sensitive about it, many people read that first report thinking that I was trying to create a persistent bull story for emerging market stocks. Nonsense.
True.
And within that, everybody knows that having strong GDP growth isn't the same as having persistently strong equity performance. It's a pretty big ingredient to it, although there's quite a bit of evidence that it's GDP per capita, actually, not GDP. And thirdly, if you really look closely, actually in the first decade, they did outperform. That's why the whole BRICS thing did become so idiotically popular with every multinational in the planet. I remember being a guest, doing a very big thing in Moscow at their sort of Davos in the summer. And because oil prices had gone up every year for 8 years, these guys thought oil prices were going to go up for the next 800 years. Mm-hmm. And surprise, surprise, as soon as they went down, Russia's not really shown any growth since. And as Martin Wolf, annoyingly, often jokes with me, you should have called it IX, with no R and no B. And of course, for some of these places, there is the commodities curse. Absolutely. So you've got to be able to deal with it. But even within it further, last comment, India has outperformed virtually everywhere forever.
That's very true. That's very true.
Absolutely. So, I think linked to what we're going to turn the tables after lunch, and I'm going to be grilling you.
We're talking about emerging markets.
But on this issue, you've got to be careful aggregating, again, going back to one of the reasons why I jumped this thing. To call all these places emerging markets is just bonkers.
It's a mistake.
What global markets for everybody doesn't have a major influence and relevance with China? And China's an emerging market when it's creating half an Italy last year. Come on.
So before I turn, if you were to summarize the view on markets over the next, on the next 5 years,
skillfully avoided answering your question.
I've noticed.
I actually,
would you adventure or?
History never repeats itself, but it does rhyme. I know from my time in financial markets, at least 40% of whatever I say is wrong, at least. But this time a year ago, I thought, the mood was the dollar's going to go up because of tariffs. I'm like, how does that work? Rubbish. And it went down. And because of this great story with US AI, US stocks are going to outperform. Didn't happen. I think what started last year is the beginning of a multi-year pattern that was a bit like the noughties, where I'll contradict my previous answer. Broadly speaking, even though it's a ridiculous phrase, emerging markets and probably European equity markets are going to outperform the US.
Absolutely. On that note, perhaps I could turn it over to our audience to sort of ask any questions.
Ask you a question. Liverpool or United?
I love this. You hear the question? Liverpool or United?
The question is UK versus Europe.
UK versus Europe.
That's a good question.
Don't know. I think there's some very interesting dynamics in both. The mood about the UK is even worse than the mood about Europe. Financial Times overnight has a very interesting article about the beginnings of possible signs of an uptick in UK productivity. It's very tentative. But last year's productivity recorded performance is twice what it was the average since the financial crisis. And it's not impossible, and again, many of you know here, greed, fear, popular views. If you want to be a really good investor, be careful of a lazy consensus. And this view that the UK is permanently collapsing and is a disaster for all time, and every human being from Britain is moving to Dubai, I'm like, be careful. Because if UK productivity is starting to improve, the mood will change pretty quickly. If. And so I don't know. I think both of them are interesting, because the mood about them Davos adjusted, is kind of pretty bad.
So thank you. Perhaps one last question from the lady.
Thank you, Lord O'Neill, for such an insightful session. This is Basma Al-Farsi from the state of Kuwait. So my question is that what's your perception of the global governance and its impact on the economic landscape?
On the current landscape?
Yes, thank you.
Well, we'll see another twist about it in the US with, I think the new Fed chair is probably going to be announced in the next 24 hours. If for some reason, contrary to overnight speculation, Trump chooses somebody that's just going to do what he tells them to do, there's another rung on the ladder being taken away from the US rules-led order. I hope, especially for any of you that are long dollars, that doesn't happen. I think the US, as I said before, they've kind of elected this guy because there's a sort of realization that they can't dominate the world in the way that seems so obvious for all of our lifetime. And in that sense, they're being realistic. And so they're sort of lashing out to fight on to keep it going for as long as they can, as an aside, despite the fact all its international services companies have benefited spectacularly from this so-called mess of the past 25 years. And it's forcing other places to think differently. Our Prime Minister is in China today, or I think he might be flying back today, but he's been there for 3 days. He's gone there knowing that after Mark Carney went, and then Mark Carney made his Davos speech, our excitable friend in Washington said, oh, 100% tariffs. Despite that, our leader has gone there and said, we want to get a better relationship with China. Mm-hmm. And it's more signs of people of going right back to Mark Carney's speech and the Finnish foreign ministers. This is people in other parts of the West waking up to being more serious about the values that they really believe. And it was fascinating earlier today to listen to the wonderful comments from your great guests from here, talking about Security Council at the UN, and this sort of weird thing about, what was he calling it? The War Council, what is it called?
The word peace. Board of Peace.
Yeah. One of the byproducts of that, I would guess it almost definitely, is we're going to get some reform of the UN Security Council. That should have happened 30 years ago. And again, going back to the slide about global governance, is it any surprise that we have all these institutions that haven't really, I used to, my wonderful ex-colleague from Goldman, Peter Sutherland, who sadly passed away many years ago, he was the champion of the WTO and the EU. And Peter used to get so annoyed with me. I said, Peter, the WTO doesn't do anything that's of any use for anyone because it doesn't function the way it's supposed to because of all the vested interests and da-da-da-da-da. So it all now feels a bit more falling apart, but it all needs to change to be better and more effective and, truly representative of the reality of the world. We in the West have sort of dreamt for the past 20-odd years that one day over 1 billion people in China are going to wake up and say, oh, we want to be one of these democracies. They don't want to be one of us. They want more wealth. And you find that many places. And it's like, so are we really trying to kid ourselves that these guys are going to be a bigger and bigger share of global economic activity and take their own people into middle income statuses, possibly, and yet we're not letting them have more say in global governance? Doesn't make any sense.
On that note, Lord O'Neill, that was a pleasure to talk to you. It was a great conversation. Thank you so much. Thank you so much.